On the surface, it looks like Ford's back on top record revenues and booming stock price. But their electric vehicle plans are screeching to a halt. New factories were cancelled, models were delayed, and Ford is abandoning the EV race altogether. Also, Ford's financial performance doesn't quite match their triumphant headlines. Profit margins are shrinking, net income is down a shocking 24%, and whispers of internal struggles are swirling. Is this gas-powered strategy truly a winning formula, or is it a desperate attempt to mask deeper problems? In this video, we will examine Ford's strategic chess game. We'll analyze the hidden messages in their financials, expose potential blind spots, and ask the tough questions about their long-term vision. So be with me until the end, and don't forget to subscribe to the channel first. Something's brewing over at Ford, and people are scratching their heads. Despite a recent pullback on electric vehicle investments, think cancelled factories and delayed models, CEO Jim Farley's got the company steering back towards gas cars and hybrids. Now, some people are giving him a round of applause, claiming this move's a winner, but the market's not entirely sold on the idea. Look at Ford's first quarter results. They knocked it out of the park. They beat expectations left and right, reporting $42.8 billion in revenue. A cool $4.04 billion more than estimates. And how about those earnings per share? They clocked in at 49 cents, leaving forecasts of 42 cents in the dust. And let's not forget about earnings before interest and tax, which hit $2.8 billion, way ahead of the $2.54 billion expected. According to the report, Ford stock saw a little uptick of 3% after hours following last Wednesday's report. Sounds promising. When the market bell rang the next day, the stock didn't take off like a rocket. Instead, it hovered around the same spot, dipping a tad. Curious? And that's not all. Another article on Yahoo Finance says something else. It shines a spotlight on some not-so-rosy numbers from Ford's first quarter. Sure, revenue was up a modest 3% from last year, but net income? Down 24%. Profit margin took a swing of decline of 4.2%. And don't even get me started on earnings per share. They dropped from a solid 44 cents a year ago to a meager 34 cents in the first quarter of 2024. So, what gives? On the surface, it might seem like Ford's cruising along just fine, but peel back the layers and you'll find significant cracks in the story. So, Ford, along with several other automakers, has been making some bold moves in the world of hybrid vehicles. And guess what? It's paying off big time. Sales are up 36% at the company. While Ford is doubling down on hybrids, it's halting investments in electric vehicles, EVs. And it's not just Ford. The whole EV sector has been seeing a slowdown in demand lately. This move seems to be paying off in the short term, at least according to Tesla. On a recent conference call, Elon Musk and the gang spilled the beans. They're making more dough off their competitors' pivot back to hybrids and gas cars. Why? Because those other guys need to buy more emissions credits, which lines Tesla's pockets nicely. But Elon's not exactly thrilled about it. This move doesn't align with Tesla's mission of pushing the world towards electric vehicles. Let's be honest here. Tesla has been the OG of the EV game for decades, leading the charge in transforming the entire auto industry. So, do they see a pullback in EV investments? Moreover, the auto industry's global shift towards electric vehicles, EVs, has hit a speed bump. You see, Tesla, the trailblazer in all things electric, relies on the big players in the industry to help pave the way toward an electric future. We're talking infrastructure, supply chains, regulations, you name it. It's a team effort, and everyone's got to pull their weight to make it happen. But here's where things get interesting. In February, Ford made significant cutbacks, breaking joint venture battery plants and scaling down operations in Michigan and Turkey. And guess what? Tesla is singing a similar tune. On a recent conference call, they spilled the beans. A surplus of batteries is flooding the market, and suppliers are slashing prices left and right to stay competitive. So what's the takeaway here? Well, for one, it's a sign that we're not quite ready to go all in on batteries just yet. And that's okay, there's no rush. Tesla has all the batteries it needs from suppliers, so they're in no hurry to pour more cash into the battery game. It's all about playing the long game and making strategic moves to accelerate the inevitable shift towards electric. Something Elon Musk is all too familiar with. While other automakers are halting EV investments, Tesla is seizing the opportunity to score some sweet battery deals. And let me tell you, they're still the big cheese in the battery game. Elon Musk dropped a bombshell on the conference call, announcing plans to roll out new, cheaper models in 2024. With batteries becoming more affordable and EV sales slowing down, it's the perfect time for Tesla to swoop in and capture consumer interest with fresh rides. Now, here's where Ford might have missed the mark. In February, they were all about trimming the fat, adjusting capacity to match demand, and reassessing their battery game plan. It's like Ford and Tesla are doing the electric vehicle tango, but they're moving to completely different beats. While Tesla is cranking up the volume of its battery game, Ford is hitting pause and taking a step back. You might be scratching your head and wondering, what gives? Making your own batteries is like having a golden ticket to the chocolate factory. It's all about securing that sweet supply. Historically, batteries have been as rare as a unicorn sighting, but domestic production has been picking up steam thanks to some nifty US incentives. Companies like Tesla and Ford are developing new battery tech to give drivers more bang for their buck. Think better range, faster charging, and longer lifespan. But we're seeing a surge in these low-cost, but not so efficient lithium iron phosphate, LFP, batteries popping up in electric vehicles everywhere. What does this mean? It means there's no shortage of batteries to go around. Now, Ford is playing it safe, scaling back on new product launches and keeping its cards close to its chest. Meanwhile, Tesla is hitting the gas pedal and revving up its latest product launches faster than you can say, electric dreams. And when your inputs become cheaper than a dollar store bargain bin, like batteries are right now, you'd be crazy not to seize the moment. Many are saying that Ford's decision to abandon its electric future might just hand Tesla the keys to the kingdom. Ford's bread and butter is its pickup trucks, especially the iconic F-150. It's not just a truck, it's a cash cow, raking in big bucks for the company. But in a world where electric vehicles are the name of the game, Ford needs the F-150 to make the leap to EVs to keep its bottom line in the green. Enter the F-150 Lightning, Ford's electric answer to the future. But it's not exactly flying off the shelves. Instead of doubling its electric pickup lineup, Ford pumps the brakes and delays its next-gen pickup truck. Meanwhile, Tesla's Cybertruck is revving its engines, ready to take the EV pickup market by storm. And with Ford sitting on the sidelines, it's like handing Tesla a golden ticket to dominance. Sure, Ford beat Tesla to the punch with their electric truck, but now Tesla's cranking out Cybertrucks like there's no tomorrow, and they're on track to outpace Ford's electric vehicle output by the end of the year. Talk about a missed opportunity. Ford had the lead, but now they're giving Tesla a free pass to take over the pickup truck market. And the hits keep coming. Ford's electric vehicle division is taking a beating, with volumes down and revenue plummeting faster than a lead balloon. Let's break it down. Ford's decision to focus on hybrid vehicles while scaling back on EV investments is a smart move in the short term, especially with EV sales slowing down. But here's the kicker. Tesla's not sitting idly by. They're taking apart the competition piece by piece, cutting costs wherever they can, and gearing up for a Cybertruck showdown. When Tesla lowers its prices, everyone feels it, including Ford. With the Cybertruck ramping up production, Ford's electric future looks more uncertain than ever, and the numbers don't lie. Ford's financials are taking a hit, with its EV division bleeding money, while its gas car business struggles to keep up. But it's not all doom and gloom. Ford's commercial services and distribution segment is thriving, showing that there's still some light at the end of the tunnel. However, Ford's constant shifting between gas, electric, and hybrid vehicles paints a picture of a company needing more focus and vision for the future. So, did Ford CEO Jim Farley make the right call by pulling back on EVs? Or should Ford have stayed the course and weathered the storm? Only time will tell. But one thing's for sure, the electric vehicle market is evolving, and Ford might be playing catch-up if they're not careful. What do you think about Ford's recent strategies and moves? Let us know in the comment section below, and remember to subscribe. See you in the next video.